Hello there, Nick Vail here, as always, helping you live your best financial life. I hope that you're watching this while self-isolating and that you and your family are doing everything that you can to stay safe. This is a trying time, and my thoughts and prayers are with everyone that is struggling personally and financially. I wanted to create this video so that we can take a step back and look at things with a little bit of a historical perspective, and then we'll discuss some items that you can do right now that are smart financial decisions. Let's take a historical perspective. First, we'll look at how markets have reacted to pandemics in the past, and then we'll look at a big mistake that many investors are making right now. Pandemics have happened before. Now, I don't want to belittle the seriousness of this situation. It's uncharted waters, and it's scary for everyone. I do want to point out, though, that over the course of time, we've seen other outbreaks: SARS, swine flu, Zika, to name a few. And you'll see that markets have recovered each time. Staying invested is key here. Too many people are out there selling their portfolio to cash and hoping to buy back in at just the right time. I'll show you a few visuals as to why it's too hard to predict just the right time to buy back in, and how that type of strategy exacerbates the issue of your portfolio's declining value. What we are looking at here is hypothetical growth if you invested $10,000 from January 1st, 1980 until the end of 2018. What we can see here is that missing out on just a handful of the best performing days in the market has an immensely negative impact on your values long term. For instance, if you missed out on just the 10 best days, your portfolio is cut in half. Now, many will look at this and think to themselves, well, then I just have to time it better than everyone else did. Problem is, this is impossible. No one can accurately predict the perfect timing of the market. Let's look at another visual. The gist of this chart is that the spikes are very volatile trading times in the S&P 500. The green dots represent the 25 best performing days, and the red dots represent the 25 worst performing days. As you can see, they happen in close proximity to each other. There is no way to know exactly when to jump in or jump out. So what should you do instead? Stay invested. Stick to your long-term plan and don't let headlines and this temporary setback scare you into a long-term poor decision. Look, I know that this is much easier said than done, but it's the best thing to do. What we're looking at here is how often markets have had positive returns over different time periods. We can see that the longer we invest, the odds of positive outcomes increases. But those that are panic selling and taking bad advice at times like this are drastically decreasing their participation in the upswings of the market. The longer this downturn drags on into even a possible recession, the longer the recovery might take. You owe it to yourself to take the right steps now to make sure that you're shortening the time it takes for your portfolio to recover. So what are some smart money moves that you can be making at a time like this? The first thing you should do is take a step back from the numbers. Ask yourself, why are you investing? When we learn about our clients' why for investing, it's never to get X percentage return or hit a number benchmark. It might be to give their family peace of mind, security, having the financial ability to create wonderful experiences. Spend your time right now with your loved ones. This could be a great time to have conversations about the future and what you'd like to be doing when you retire, or what type of legacy you'd like to leave for your loved ones. The next thing you can do is to have a plan in place to reach the aforementioned goals. I'm reminded of the Zig Ziglar quote, "If you aim at nothing, you're sure to hit it every time." Get a detailed plan in place that can protect your likelihood of reaching your financial goals, include strategies for certain life transitions, one that factors in the many moving parts of your financial life. If you don't have a plan like this, now is as good a time as any to get one. Find a fiduciary financial planner that can help guide you through the process and keep you accountable to your plan. One of the problem areas for many families right now is that they had no idea how much risk they were taking in their investments. Do you know how much risk you're taking? Do you understand how your portfolio may react to different market environments? These are all issues that a strong financial plan will address. Something else that you can be doing right now is buying the dip. Now, the caveat here is that you need to make sure that you have enough cash reserves to get you through any income slippage that your family may be experiencing. If you're fortunate enough to have your income relatively unchanged and have cash in excess of an emergency fund, you may want to consider investing it. One of the foundational keys to investing is to buy low and sell high. With the markets trending downward right now, this can be a great buying opportunity, especially for investors that are young or still have a long time before they plan on retiring. Another thing to consider right now is tax loss harvesting. Now, this is a strategy in which you lock in some of your losses, if you have them, in taxable accounts to offset future tax burden. We are reaching out to all of our clients right now with taxable accounts to do just this. And we will be monitoring any further downturns in the market to potentially do it again. If this is something you're interested in, speak to your advisor, and then absolutely make sure you're coordinating this with your tax preparer as well. The last tip from me in this video is to remember this time. Over the past several years, it's become really easy to forget that downturns happen. Realize that bear markets and downturns are common and should be expected. It's important to invest with these instances in mind. Have a household investment strategy in place and stick to it, even when times are difficult. Actually, more so when times are difficult. Every bear market we've seen has eventually ended. This too will eventually end. I hope that you found this video to be helpful. Again, my heart goes out to everyone that is struggling health-wise, mentally, or financially. Please be safe out there, and let's do our best to be there for each other. Thanks for watching. I'll see you next time.